Awesome. So we got a little bit of light attendance. We have half the room's also our team here. So please feel free to ask some questions. We're going to try to make it interactive. We're really excited to talk to you. Thanks, Beal. Again, my name is Nick Mabunay. I lead partnership growth at Next, and I'm hoping by the end of this breakout, you'll have an understanding about workers' compensation insurance, how we work with Gusto, and how you can bring a really cool, valuable solution to your clients, particularly for cash flow management. So out of the folks we have in the room, raise your hands. How many feel really confident understanding, articulating, and talking about workers' compensation insurance, potentially to a client? A little bit? I got like half and half? Okay, so we're going to try to educate you today.
It's in Minnesota, it's not bad. They have
Yes. So we're going to try to educate you today, help you feel more confident, and also understand how we've worked with Gusto to create a cool solution that you can talk about and bring to your clients. So a couple things we want to talk about in workers' compensation. One, it's required. It's a required insurance coverage if you have an employee as a small business owner. It covers lost wages and medical costs for any on the job accident that might occur. Two, since it's required, there are costly penalties involved if you do not have insurance. It's highly regulated. Insurance agencies and state regulators always try to make sure that employees are covered by workers' compensation policies. So if you as a small business owner are not compliant, you can incur a lot of penalties. And three, the accident of what happens, is it negligence by the employee or not, doesn't really matter. That employee is entitled to lost wages and medical expense coverage regardless of how that accident happened. It's an on-the-site injury. So it's really important to think about this and how we talk about our solution and how we try to partner with Gusto. So to drive home some of the facts around that, there are 4.9 million workers' compensation claims filed annually in the country. It's a lot. It's a huge number. And the average workers' compensation claim is over $40,000. Again, this covers if you're out of work, the lost wages, the medical expenses to get you back into work, and any attorney fees to adjudicate that claim. If you don't have workers' compensation coverage as a small business, you are still on the hook to pay for this for your employees. It's highly regulated industry. So I think it's important to understand those basics as we talk about kind of the value we're bringing to Gusto. So first, maybe for your own businesses or if your clients, there's kind of a traditional way about businesses have gone about going workers' compensation. Sometimes clients just realize, hey, I need to get workers' compensation. I have employees, I know about this. I'm going to talk to a local insurance agent. So they call a local insurance agent. Their insurance agent says, great, how can I help you? Oh, I need workers' compensation insurance. The first thing the agent will say is, okay, that's great. How much payroll and how many employees are you going to have over the next 12 months? And the client says something around, oh, I don't know. I have one employee. I'm probably going to grow. I'll probably have 3 employees and maybe $250,000 of payroll by the end of the year. I see someone nodding. You feel like this is a common scenario, right? Good. So the insurance agent says, okay, let me kind of just smooth that out and we'll estimate 2 employees of $150,000 of payroll. I can get you a quote. Here's your coverage. You're compliant. You're good to go. Sound good, right? So how does this look graphically? I'm kind of a numbers guy, so I want to lay out a scenario of what this looks like in terms of the actual cost of the insurance and the actual need of the insurance. So imagine that we have a scenario over 12 months and we graphed out the actual cost of that insurance from that scenario we just laid out. And that cost, we essentially said it's just like this average across 12 months, those 2 employees for $150,000 of payroll, and it's just represented by this straight line here. Imagine that the insurance costs over 12 months. But remember our scenario, the actual need, that payroll is gonna go from 1 employee to 3. So how do you think if I put a line of payroll on here, what that would look like? Exactly right, from bottom left to the top right. So in this scenario, essentially we've mapped out the insurance cost versus the insurance need, your premium versus your payroll. So the first thing you'll notice if you look at the left part of that graph, you have this triangle where you have the insurance cost above the insurance need. And this is a scenario where you're essentially overpaying for your insurance. There comes a point in our scenario where there's an inflection and then that the insurance need outpaces the insurance cost. And this is a scenario where you're actually underpaying right now. So this is a very common scenario that happens in the industry when you're getting quotes as a small business, as well as this scenario where you might say, hey, I'm just going to underestimate. I really have 5 employees, but I'm going to say I have 1 and $100,000 of payroll, where you're underpaying. Or this scenario where you have a business that doesn't really have linear or straight payrolls. It might be cyclical for some reason. Or the last one where you were just very bullish and then you just you overestimate your payroll. So when you look at these graphs, you kind of have this like underpay triangle, overpay, underpay areas, and then this overpay triangle. What do you think is the most common scenario? Sir, what'd you say? Less. You think it's the left one? Anybody else agree with that one? You're exactly right. The most common one is the left scenario. I would challenge you to think about your own. Most people encounter insurance personally with your personal auto. If you're getting a personal auto quote, you usually get asked the question, well, how many miles are you going to drive next year? And the first thing you say, 5,000. Meanwhile, you have 3 cross-country trips planned, and you're racking up 15,000 miles. Because you know if you put a lower number in there, you're going to have a lower insurance premium. And it's human nature here. Instead of miles for personal auto, it's payroll for workers' compensation. So the majority of the time, clients underestimate their payroll and their insurance need, essentially. With personal auto, you can kind of get away with it. There's nothing to catch you on the back end, but something exists in workers' compensation insurance called an audit. This is a mechanism that the industry allows to ensure an efficient, stable, and profitable market. At the end of the day, we're insuring employees. We want to make sure employees feel covered for medical expenses and wages. But this is something that insurance carriers can deploy. These audits usually happen 3 to 6 months after the insurance term's over. And any audit variances that are found, either overpayments or underpayments, are charged or given back to the customer. Again, you're talking about 18 months after that insurance policy started. So as you said you're like, hey, I'm going to get hit, my clients get hit with audits. It sounds like you've experienced this. Would you say these are fun conversations or not fun conversations? Very unfun, right? It's a lot of unforeseen cash flow challenges. You expected this is to be over, you close the books, and then all of a sudden, hey, from 2 years ago, you have an audit and you owe $5,000, $10,000, whatever. It causes a lot of, again, unforeseen cash flow challenges. So again, we go back to our graph. What does this look like? So imagine a scenario. We have a client come in, they underestimate, they say, my insurance cost for 12 months is going to be 1 employee, and they pay it in full on January 1st. So that's represented by that horizontal dotted gray line, and essentially everything below that in that rectangle is what they paid. December 31st, the actual payrolls run in, and they have this upward slanting line, and you have essentially this triangle that they were underpaying. On April 1st, 2024, insurance carriers perform their audits, they find the differences, and they actually charge that customer, that client, back what they owe in that entire triangle area right there, causing a lot of unforeseen cash flow challenges. 82% of small business close from poor cash flow management. I'm going to say it again. I think it's really important for our conversation. 82% of businesses close from poor cash flow management. My daughter's she's starting to get into emojis, and she wants a phone. But I thought of an emoji that represents the scenario. You're saying this is not a fun conversation, and that's it right there. I don't think I want to tell a client this. How am I going to have this conversation? So that's the point of our talk right now. Let's connect the dots. So first, who is Next? Next, my team from Next. We are a digital-first company reinventing the insurance industry. We are 100% focused on small businesses. There's a lot of large insurance carriers like the Liberty Mutuals of the world, the Progressives of the world, the State Farms, that they do both personal insurance and small business insurance. We are only focused on small business insurance exclusively. We're trying to be simple, affordable coverage, quick and simple, digital as much as possible. We're also Gusto's preferred small business insurance partner for over, I think, 5 to 6 years now. And we have access to our own insurance products as well as over 30 other insurance carrier products that they're A-rated or best. You can think of us like Target. You can come in, you can get the right coverage, the right price when necessary. And in our operations, we have a digital experience, we have an offline experience for both a trusted agent conversation, a digital conversation, and a service model that really helps get customers what they need. So this is who Next is. And Gusto loves Next, and Next loves Gusto. So think about our scenario. We've created this solution called the pay-as-you-go workers' compensation solution. This solution essentially matches insurance premium to actual payrolls. It's fully integrated into the Gusto payroll experience. So there's no self-reporting, offline spreadsheets. It's all behind the scenes, behind the scenes to you and behind the scenes to the client. And then there's access, again, to over 30 insurance carriers, A-rated or best. So we can get the right coverage, the right price to the right client every time. We have no gaps in our appetite as an insurance carrier, as an insurance brokerage for the clients that are coming in the door. All right, so what does this look like now? Back to our graphical representation. So let's imagine a scenario where we have a client that is using Gusto Payroll, has procured a pay-as-you-go solution from our partnership, and they run payroll quarterly, just to make it simple. So April 1st comes, they run payroll, they go into the Gusto platform, pull payroll, and behind the scenes, the Gusto payroll data talks to Next Insurance, and we essentially calculate the insurance that was needed to cover that small business for that first quarter, and we charge that client automatically. So essentially, we have this kind of graph and area that we've said, hey, we paid with the first payroll run. This happens again at the second payroll. Second payroll's run, customer goes in, they run payroll. Behind the scenes, the data talks to each other. We can charge that customer the right payroll, no underpayment or overpayment. And this happens again at the third payroll cycle and the fourth payroll cycle. So, question again for the audience, what do you notice with this graph versus the other graphs? Exactly. It's matching. Like there's a term, if again back to personal auto insurance, have you ever heard like usage-based insurance, pay as you go? This is essentially it. This is the same thing. Like you're paying the actual needs that you have as a small business with a solution. So we talked about a couple different scenarios. So the scenario, it works for this solution where you underestimated. It works for this solution where a customer might have cycles up and down. It also works for this solution where a client might underestimate payroll. Question for the audience is, which one of these is a landscaping business? Absolutely. I'm from Boston. Landscapers ramp up probably around April, mowing a lot of lawns, cutting grass through summer. They clean up in the fall, and then they basically shut down and become snow plowers in the winter. So you can imagine that payroll cycle. It ramps up and ramps down again. So we can match and we can provide a very seamless pay-as-you-go to match the cash flows on this. Yep, landscaping, middle one. All right, so let's go back to our audit scenario again. So imagine a client again who is running payroll quarterly. They have our solution between Next and Gusto for pay-as-you-go workers' compensation. And every quarter, a small business runs payroll in Gusto. The workers' compensation premium is calculated behind the scenes to the customer, and we pull that premium straight from the small business owner's bank account. Nothing seamlessly behind the scenes. April 1st, 2024, carriers will try to audit, but they recognize that pay-as-you-go solution. And 85% of the time, they just take the data that we have behind the scenes to the customer as is, and they don't need to do any more information gathering or audit activities, all behind the scenes to the customer. So the customer doesn't have to see this, doesn't have to know about it. They basically just get a notice that your audit's complete because they trust the data that we've built with Gusto and the work that we've done with these carriers to enable this pay-as-you-go solution. So I have an emoji face to kind of counter my first one, but it's this. We essentially feel like we've built a really cool solution to provide that stable cash flow management on the front end. The question, how can your clients get this solution? They can get it on their own. If you go into the Gusto platform, there's a stay compliant tab, and we have a whole online flow, offline flow in there. Also, we have a QR code here. You can try to scan it, but we're manning our booth, and you can scan that QR code. We have a kind of a accountant's dedicated information and referral page where you can refer your clients. And one of our team of licensed agents will get on the phone, follow up, and try to get customers the right insurance product, pay-as-you-go solution, totally within Gusto as quickly as possible. So again, I'm finishing really early, so I'm thinking I might get yelled at. But to reiterate this is a really cool solution that we created in partner with Gusto. Match insurance premiums, the actual payroll. It's fully integrated behind the scenes. There's no self-reporting. We have access to over 30 insurance carriers that can provide the right price and the right coverage to the customer. So I apologize it's short, but it's tough talking about insurance for 50 minutes. So I'm going to open up the questions. So I think we got one. Yeah, I think it depends. The 15% are triggered usually for larger accounts. Insurance companies want to kind of see some of the larger differences. But maybe Pam, can you help answer that one? They're really tight anyway, so there's the little deviations. So it's more of just a paper chase than like that bad conversation of you owe twice as much as you thought you owed. So. And we do, oh, go ahead. That's impossible. Yeah. Good question. Any other questions? Oh, yes. It's actually AP&T, I can't say it right now. AP&T was formerly, is now known as Next. Essentially, it was the insurance brokerage that was the original partnership between Gusto. Yes. We're working on that rebrand, but yes, Next and AP&T are the same thing now. So yes, that's. Oh yeah. Awesome. Thank you. Another question we usually receive too is we're talking about pay-as-you-go workers' compensation. However, your clients, from an insurance, property, and casualty perspective, they need other coverages. You're thinking about general liability, usually auto, property of some sort, professional liability. And we are a full agency brokerage that can support all those other lines of business too. So we are known for our pay-as-you-go workers' compensation solution and offering, but we can be a one-stop solution for all the insurance needs that your clients have coming in the door. So, yes? Mm-hmm. Yeah, I would say the first answer is like we can handle that. Like we are an insurance brokerage. The specifics, I'm going to actually phone a friend. Jim is the head of our sales team and can talk through like what that process looks like. But at the end of the day, we want to work. Don't be hesitant. Hey, like I don't know if I want to send this over. Please send it to us because we can be that one-stop insurance agency for your clients. Other questions? Yeah. The, trying to think, we had a couple other questions. The service side too is really important too. We have a whole dedicated in-house service operation. Customers can see their, there's a whole portal where they can see their insurance policies, pull certificates as needed, which is a very common transaction. And we pride ourselves on like the service we provide to support Gusto clients at the end of the day. Cool. Cool. So that's what we have. I think if you're interested, please meet us at the booth. We're excited to talk more about it. We're really proud of what we do to support small business. And this is a really awesome opportunity for cash flow management. You don't have to deal with the audit to the back end, and particularly during the times of inflation, economic uncertainty. So appreciate your time. Thank you. Awesome.